How's it going? Saturday morning. Go over this week with you, and times are volatile. Basically, when they're this volatile, wouldn't even you're only gonna want to play one side or not play these with any type of risk trades, um, or mainly just stick to one side. But I finished off last week's video saying Apple will be going higher because those puts were gonna close down. Um, and so here's a 5-day chart, Monday, Tuesday through on. And so we have Apple run up and, was looking good, doing what I said, and then it topped out. So that's about all you get. And if you got to be quick with the trigger nowadays, with all the headline risk, and if you took profits there, you're good to go. If not, these things are just not normal. That's not normal. And you have to have how I always talk about, you'll see these spikes like from options closing because there's not, if you're looking at 22 million shares in a day and it's only 5 million, it has to pass the torch on to real buyers have to come in there to keep this going. That's just what ignites it is, puts closing out and then it'll keep going. So, it came from 378 up to 391 and it just, it forgot to stay there, put it that way. So with the VIX this high, you're just gonna have to use this for just day to day. You can't look out into the future until see something change. You're gonna have to use it on a lot tighter time frames, or just even daily. Say Apple's opens up right here. So when it gets to 380, buy some shares, sell some calls against it. When it gets up a little bit, just scalping type thing. So going back to the bigger picture, here's a full screenshot of this, the November 19 expiration. So look at what sticks out. All these calls expired worthless. So Apple finished right here at 375. So look at all these calls. What direction do you think that Wall Street wants Apple? Lower the better. Now's the time. If you're going to break it, now's the time to do it. Just massive amounts of calls that expired worthless. And so what you need and how are you supposed to know? Here was what I'm going to close this down. Here's what it looked like 4 weeks ago. And, the VIX wasn't this high, or times weren't this volatile in Apple. You didn't have these rumors. And so, Apple, if it's a quiet market, should have finished right up here. And say you put on a trade 4 weeks ago right here. How are you supposed to know? You're not. That's part of trading. Nothing you can do. Now, looking back, here's what happens, and just like what will be happening soon on the call side. Whenever the stock breaks this completely, it means there's not enough buyers. It's bearish. There's no buyers to pick up the slack to put it back over this way. And so what you are going to have is, let me come over to this little weekly. I had these at weeks, but that wasn't really appropriate. It's more frames because I don't know the exact time frame. So when you break it, it's not a good sign. It'll keep going down because there's just so many calls. It's more profitable for Wall Street, or there's an agenda, or whatever. Just look at this type of selling. People are just liquidating Apple. So things came up. You have to just let it keep going and going and going. And what's going to happen? It'll find a backstop eventually. So, we're right here somewhere. Apple keeps going down. The calls keep building. People keep buying them up. Apple's going higher. It's not. It won't. You need to find this backstop in this frame 3. And you want these calls to keep closing down, closing down to 390, 380, 370. And people in this will never change. So say, let's go to just a real world example, I guess. This is next week's weeklies. So see how these calls, so you have, actually I have a screenshot of it. Here's it, not that one. Here is next week's weekly charted out. It's still pretty new, but see how people still love buying these calls and just, no, we're not scared of Apple going down. So you would want to just, start selling calls, do covered calls or whatever, stick to this side and let the bottom play out. And so you see how this 350 has some interest now, and again, way too early, minimal amount of open interest. But if you start seeing a reoccurring theme where on the weeklies it's the 350 that's building or showing interest, and then on the monthly Decembers it's the 350 again, on the Januaries it's the 350 again, or whatever it may be. So say this is the 350. That's going to be your backstop. Apple, that's its rock bottom. But in the meantime, Apple's trading 365, 360, 355, and people are getting scared. So this starts to build up over here. But at that same time, your calls close down, close down, close down. And it's going to make a break because fundamentals or just a catalyst will go, or just people will start buying the stock. It'll get sold off so much. And once you get Apple over that highest call open interest, the same exact thing will happen over here. So Apple was 400 and it just went on a $30 drop because whenever it breaks this and it can't get itself back up, that means just there's no buyers. There's not enough buyers to do it. So when it breaks this call side, it means there's not enough sellers to keep it down. There's just all buyers. So that same thing will come true and you'll go on a massive run. And this is why Apple will just be flat. So you'll have it hang out here for 3 months and then something will break either one way or the other. So it broke down this time, let it do this, and it will have to break up, and that will be your $50 run that you constantly see. Apple moves 4 times a year, these big, huge runs, and this is what it'll look like. So it'll be really easy to see when this run's coming, and it's got to be coming soon because we just broke the put side, and so that's not going to last long because these runs don't last very long. That's the thing. And it'll build up, and then it'll break the call side and go on that massive run, and then stall out and repeat the process. And then you can use both sides of the max pain in longer time frames because it's going to hang out. 2 months go by, you might want to start watching because this just repeats itself over and over. So that's what to look for as far as going forward. But it's close. Everyone wants to get down to this 360 level, let it go down there. It'll be the perfect time. Once you're on the bottom half, once you're closer to the bottom, you way want to sell puts. And then when you're closer to the top, sell calls. But I'll leave the trading up to you and just put out the data. Let me go to a daily chart here. So with how volatile the Apple is nowadays, or the market, you're going to need to use the data just a lot, like day to day, like I was saying. So I have here in this portfolio model, I sold the 4 weeks ago. I sold the 360 credit put spread and the 370 credit put spread, and I had some other calculations, but since this is for the public, I need to keep it ultra safe. And here's what the open interest graph looked like when I was doing it. So why am I selling way down here at 360s? Why am I selling 370s? I'm taking into account, because it's a public and I want to keep it ultra safe for people. I'm taking into account black swan events, just like we had. There's nothing wrong with selling down here. And if you're wrong, Apple went this way. Big deal. I still made money. It was a little bit, but it adds up. Or guess what? I can always roll this way. If you sell, a spread right here and it goes against you, you're just gonna take a loss. I can always come up. I can't go down without taking a loss. So going back to this 370 call or put spread here, I didn't close it out. I just let it expire because what you had on Friday, going back to, just use it as a 1 day thing. So this side is the puts and this side's the calls. You had 30, this is volume right here. Not open interest volume. So you had 38,380 calls trading, and you had 51,000 puts trading on the 375 strike. And so what do you have here? You have Apple comes up, bumps up against, so let a few hours go by and see what strike builds. So you have the 380. It bounces off of what was 380. Gee, I wonder why. and then you have it come down here to the 375 and bounce off that, or just stop there. Gee, I wonder why. So we have this. So that's why I had these 370s and I just let them expire. I didn't close them out because I knew that I have this much protecting me from it going under that 375. So if you want to use it on the daily thing, um, where is it building up at? Okay, it should bounce off there and go down. It should bounce off this or not go lower. So that would be your buy point, sell point. Um, Use it like that. And yeah, so overall, just let Apple let it do its thing and watch for that put open interest to stall to have a backstop somewhere. And one of these days, it's going to go on a massive run. So see you next. Leave you with one quick little positive tidbit, possibly. So you kind of have a recurring theme. I don't have the stats on it, but whenever you have a red Friday close on a expiration, you usually have a green Monday. You can kind of get it to. Here's the put. This is puts. So on the 400 puts here, you have 13,000 open interest on Friday, and there was only 1,600 volume. So you have about 1.1 million shares that are short in retailers' accounts. Were those hedged up with long shares? I don't know. If they're going to cover right away immediately because of margin calls and things like that. And then kind of on down the line, you can kind of do it. But so you may get a big Apple up on Monday, but we've also seen 6 million shares get dumped immediately. So, but at least any buying will help right now. This is only 6 cents in the money, so I don't know if a few people got caught not closing out, and I don't have the open interest on that one. But any little buying will help.